Almost every year I can remember, when you get north of Halloween, the mints start to run out of their current year issue, and they're like, we'll pick back up next year. Well, you throw that into the BRICS meeting in the election, and I would bet that it will be the hardest year ever, with more and more people understanding what's going on as greater volatility leads up to these big events.
You're watching Silver News Daily. Subscribe for more.
And this might be your last chance to invest before prices explode. As central banks around the world quietly stockpile precious metals and industrial demand hits new heights, the window to secure your share of silver is rapidly closing. In today's video, we'll break down why experts believe silver is set for an unprecedented rally and what you need to know to stay ahead of the curve. Don't make the mistake of missing out on what could be the biggest opportunity of the year. Stay with us as we uncover the hidden factors that could drive silver prices to unimaginable levels.
Bitcoin corrected and the market sold off, yet gold's been so resilient. And I guess my point, Dunnigan, would be, how many more times do you need to hear this before it sinks in? Again, another record being made. First 6 months of the year of 2024 represent the most gold central banks of the world have ever purchased, ever. And it only superseded last year's first 6 months. And you, at the top of the list, you have Turkey and India, of course, China, you have Poland. And it reminded me of something that, and I went and I dug this up because a couple years ago, Adam Glapinski, who still is the head of the Polish Central Bank, said something very interesting. In my mind, he tipped his hand, because in 2021, he said, and I'm going to read this to you, he says, he was trying to explain why they were expanding the country's gold reserves by 100 tons. And when he announced the plan to expand it, he said the following. He said, our gold reserves are a matter of financial security and stability. Gold will retain its value even when someone cuts off the power to the global financial system, destroying traditional assets based on electric accounting records. Of course, we do not assume that this will happen, but the saying goes, forewarned is always insured, and the central bank is required to be prepared for even the most unfavorable circumstances. That is why we see a special place for gold in our foreign exchange management process. And here again, they're buying truckloads. I don't know if any of you have seen that movie that the Obamas produced. I didn't know they produced it till after I watched it. It's quite frightening, actually. It's a movie where the whole grid goes down and the internet goes down and the ability to communicate goes down, and how fast things go pear-shaped. And you can only imagine, when you contrast something like what Glapinski is saying with the Microsoft outage recently, and then even more concerning to me, it's interesting. You see the insider sell so much leading into the end of the second quarter, right? And then we see the biggest one-day drop on the Nikkei, a massive drop in South Korea and in other parts of the world, and the biggest.
As we move further into 2024, there's a trend that simply cannot be ignored. Central banks around the world are amassing gold and silver at unprecedented levels. This is not just a minor adjustment in their portfolios. It's a significant shift that signals something much bigger on the horizon. Andy Schectman, a renowned expert in the precious metals market, has been vocal about this accumulation. He points out that the first 6 months of 2024 have seen the highest levels of gold purchases by central banks ever recorded. And while gold gets most of the attention, silver is also being quietly stockpiled. Why does this matter? Central banks, with their vast resources and deep insights, don't make moves like this without reason. According to Schectman, these institutions are bracing for a potential overhaul in the global financial system, one that could see fiat currencies falter and tangible assets like gold and silver become even more critical. Consider this. When central banks, particularly those in countries like Turkey, China, and India, increase their gold reserves, it's often a precursor to broader economic instability. Schectman emphasizes that these moves are not just about wealth preservation, but about financial security in times of crisis. If the most powerful financial entities in the world are preparing for turbulence, It's a clear signal that individuals should also be considering how to protect their assets. Silver, often overshadowed by gold, plays a crucial role here. Sheckman has repeatedly pointed out that silver, with its dual function as both a precious and industrial metal, offers a unique opportunity. As central banks stockpile gold, silver becomes increasingly attractive to investors looking for a more accessible, yet equally valuable store of wealth. In essence, the central banks are setting the stage for a significant revaluation of silver. Sheckman argues that this is a clear indication that those who act now, before the broader market catches on, will be in the best position to benefit when silver prices inevitably rise in response to these shifts.
And it will. I mean, you get a pension that says, I want to put $200 million in metals. I'm dead serious about it. What are you going to do? It's too big for us. No, of course not. And it's real. And I think those are the people that are waking up, because these are the people that are seeing very large swings in their asset values, in their net worth. And, you know, the wealthy own assets. The wealthy have bank accounts, sure, but the wealthy own lots of assets. And the swings on the up have been fantastic. But I think when they see the swings on the down, they get very nervous. And if you take a practical look at things and you are actually honest with yourself, you look at the state of the world and where it could be, to only focus on a mainstream mantra is foolhardy. All it takes is for one of these people to have their eyes open to some of the real numbers and the real reporting that you do with all of your guests every day. Watch one of those videos and their whole, it's just a poof moment. And then they realize that they better do something. And as we grow nearer to such a pivotal moment, like the big BRICS meeting in October, and of course, the elephant in the room, the election in November, I think people are beginning to kind of reflect a little bit upon what the future looks like. So yeah, I think it will happen. I really do. And when you look at the situation, if you're just honest with yourself, you know, it started in the UK. They tried to normalize, well, it started with us in 2019. We tried to normalize the balance sheet, and you get the reverse repo, or you get the repo market blow up and everything goes upside down, they pivot. And then you get the UK, they try to austerity and normalize their balance sheet, and their pensions almost blow up, they pivot. And then you get us raise rates to 5%, and the banks start blowing up, and now we're talking about pivoting. And you get the Japanese who do this and raise rates just a little bit, and strengthen the yen just a little bit, and everything blows up and they pivot. This is a situation that has been created by messing with Mother Nature, by suppressing interest rates globally for so long, creating and incentivizing so much debt that the bill has to be paid. And you're beginning to see that there are very few outs. It's either succumb to inflation or let the system blow up. Continue to print and give in to inflation, or let the system blow up. And that's what you're seeing in all these Western systems, that we're teetering.
Now, while central banks are making strategic moves with their gold and silver acquisitions, there's a broader narrative at play that directly impacts everyday investors, especially the middle class. The U.S. financial system, which has long been seen as the bedrock of global stability, is facing a series of vulnerabilities that could dramatically alter the landscape. Andy Sheckman has been quite outspoken about these risks, emphasizing that the financial system's current trajectory is unsustainable. He points out that the unprecedented levels of money printing by the Federal Reserve and soaring national debt are ticking time bombs. These actions, while temporarily propping up the economy, are creating an environment ripe for inflation and devaluation of the U.S. dollar. But what does this mean for the middle class? Sheckman warns that those who have followed conventional financial advice, keeping their wealth in fiat currency and traditional investments, are now at risk of seeing their savings erode in real value. The purchasing power of the dollar is under significant pressure, and as inflation continues to rise, the middle class could find themselves facing severe financial strain. This is where silver comes into play. Unlike fiat currency, which can be devalued by government policies, silver holds intrinsic value. Sheckman highlights that in times of economic instability, precious metals like silver have historically provided a hedge against inflation and currency devaluation. As central banks fortify their reserves with gold, silver becomes the more accessible option for individuals seeking to protect their wealth. Moreover, Sheckman points out that the middle class is often the last to react to these economic shifts. By the time the broader population realizes what's happening, the opportunity to secure tangible assets like silver at reasonable prices may have already passed. This delay could be disastrous, especially as silver's demand spikes and availability decreases. The vulnerabilities in the U.S. financial system and the potential for a currency crisis make it more critical than ever for the middle class to consider diversifying their assets. Sheckman's insights provide a sobering reminder. Those who act early, who understand the signs and prepare accordingly, will be in the best position to weather the storm. As we've seen, the vulnerabilities in the financial system are pushing more and more people towards tangible assets like silver. But there's another factor driving the demand for silver to unprecedented levels: its critical role in industrial applications, especially in green technologies. Silver isn't just a precious metal. It's a key component in a wide range of industrial processes, and its demand in this sector is skyrocketing. Andy Sheckman has often pointed out that while gold gets most of the attention for its role as a safe haven asset, silver is quietly becoming indispensable in the green economy. This dual demand, both as a precious metal and as an industrial one, creates a unique investment opportunity. Consider this. Silver is a critical material in the production of solar panels, which are essential for the ongoing global transition to renewable energy. Sheckman notes that the demand for silver in photovoltaic cells, which convert sunlight into electricity, has been surging year after year. With governments around the world pushing for greener energy solutions, the demand for silver in this sector is expected to keep growing exponentially. But it's not just solar panels. Silver is also widely used in the production of electronics, from smartphones to electric vehicles. Sheckman highlights that as technology continues to advance, the need for silver in these applications will only increase. This growing industrial demand is one of the key reasons why many analysts, including Sheckman, believe that silver prices are poised for a significant rise. What's particularly interesting, as Sheckman often mentions, is that this industrial demand for silver is occurring at a time when the supply is struggling to keep up. With mining output unable to match the rising demand, the market is heading towards a significant supply deficit. This creates a perfect storm where silver's value is set to climb, driven by the basic economic principle of supply and demand. In short, the ongoing industrial demand for silver, particularly in green technology, is a major factor that investors cannot afford to overlook. As Sheckman emphasizes, those who understand the full scope of silver's role in modern economy will see why now is the time to invest before prices reflect this soaring demand.
Look what they're doing right now in Australia. They're talking about having to provide identification before you can use social media so that the police can monitor all the accounts in case someone says something bad, or in the UK, they'll throw you in jail. And even if you're in the United States, they'll try to extradition if you say something offensive to the crown. I mean, it's like it's crazy. You know, you remember when you and I first met, Dunnigan, and we started doing this stuff during COVID, and the very, very beginning, I couldn't even say that word on your show back then. And it was the little by little, when I think about how little by little then all at once applies. I mean, censorship is a good example. Like in our life, that was never an issue. And then little bits of it kept creeping in and creeping in and creeping in. And now in Australia, they want to censor everything you say online. And they propose providing all sorts of identification before you can access an account and giving police access to it. I mean, it's like little by little these things happen, always in the name of security. And you know, what did Ben Franklin say? I'm going to butcher the heck out of it, but you know, you give up some freedom in the name of security, you never get it back, something to that extent. Just like 9/11 and taking your shoes off, unless you're TSA pre-check, you never get that back. Same thing is true here. I don't know. I think it is very concerning, and that is certainly another reason to distance yourself, if at all possible, from the matrix in a legal way. There are very few ways left anymore.
As we delve deeper into the factors pushing silver to new heights, it's impossible to ignore the broader context of global economic instability. The world is in a state of flux, with geopolitical tensions, rising inflation, and shaky financial systems contributing to an environment where uncertainty reigns. This instability is yet another powerful force driving the demand for silver as both a safe haven and a strategic investment. Andy Schectman has been a vocal advocate for understanding the implications of this instability. He frequently emphasizes that the traditional pillars of economic security, like the U.S. dollar, are no longer as reliable as they once were. With major economies grappling with debt, inflation, and political unrest, the global financial system is more fragile than ever. One of the most significant signs of this fragility is the increasing discussion around the potential return to a gold-backed monetary system. Schectman points out that this isn't just idle speculation. Central banks and financial experts are seriously considering how to stabilize their economies in the face of mounting challenges. If such a shift were to occur, silver, historically linked to gold in terms of monetary value, could see a dramatic revaluation. Moreover, Schectman highlights the growing number of investors who are moving their assets into precious metals as a hedge against these global uncertainties. The logic is clear. In times of economic turbulence, tangible assets like silver are seen as a reliable store of value. Unlike fiat currencies, which can be devalued by government policies, silver retains its worth, making it a preferred choice for those seeking stability in uncertain times. But it's not just individual investors who are reacting to this instability. Governments and large institutions are also increasing their silver holdings, further driving up demand. Schectman often notes that when both central banks and private investors begin to move in the same direction, it's a strong indicator of significant market changes ahead. The interplay between global economic instability and silver demand is a key narrative that investors need to understand. Schectman's insights underline that in a world where traditional financial systems are increasingly unreliable, silver offers a tangible, secure alternative. This growing realization is likely to push silver prices even higher as more people seek refuge in precious metals.
Number drop ever in the Dow, of course, they're all out. But when that happens, all of those exchanges go dark. Robinhood whatever. What am I trying to say? Vanguard and TD Ameritrade, all of these, and Schwab, and they all go blank, right? At the same time, what are the odds? And when you hear him say something like this, it brings back to, I think it really underscores the whole point of counterpart liability, of what would happen if the grid went down. We keep hearing about that, little pieces, EMP and grid and electric and this movie, and how everything is it's all digits on a computer screen, including the banks. So I don't know. I thought that was kind of interesting that he said that. But here again, you got the central banks buying more gold than at any time ever. But this has been something that I've been saying to you since 2020 now, over and over and over and over again. And it goes back to what you and I were talking about before we turned on the camera, about the little man rule and how the big guy's always ahead of the curve. Well, there is no bigger guy than the central banks, not only in wealth, but in understanding and in foresight and in the playbook. I think it's very illuminating. And then, of course, you have the Dutch National Bank, who I've talked a lot about, and the revaluation accountant. He recently said this has been a political decision. If there is a financial crisis, the gold price will skyrocket, and official gold reserves can be used to underpin a new gold standard, according to the Dutch National Bank. Little crumbs that are laid at our feet. Well, you got the heads of central bank, one guy saying that it allows you to start over with a new gold standard, and another guy saying that it allows us to protect ourselves against the grid going down, in essence, and everything is digital. I mean, what more does a guy need to hear? And then when you see the central banks buying it at a level the world has never seen, and you see the exchanges all in unison suffer the same issue, The day that the market goes down, it's like, are these tests? Are these warnings? Are these crumbs? I don't know. You tell me. This is where I try and take all of these things and put them together. My mind goes right to it. Hell yeah, this is a warning. This is a test. This is a omen. And listening to them say these things, how do you not think that? I think the old statement, you don't own it if you don't hold it. I don't know that I really believe that, but there is something to be said for the elimination of any and all counterparty risk.
As we've seen, the increasing demand for silver, driven by industrial needs, central bank accumulation, and global economic instability, is setting the stage for a dramatic price surge. But there's another critical factor at play: the tightening supply of silver. When you combine soaring demand with supply constraints, the result is a perfect storm that could send silver prices skyrocketing. Andy Schectman has repeatedly warned that the silver supply chain is under significant strain. One of the most alarming trends he highlights is the sharp decline in inventories at major vaults like COMEX and the London Bullion Market Association, LBMA. These vaults have been key sources of physical silver for the market, but their reserves are depleting at an accelerating rate. As Schectman points out, when these inventories start to run low, it's not just a signal. It's a flashing red warning light that the market is heading towards a supply crisis. This supply crunch is compounded by the fact that silver mining production is not keeping pace with demand. Schectman notes that issues in major silver-producing countries like Mexico and Peru have led to multi-year lows in output. With new mining projects taking years, if not decades, to come online, the immediate outlook for increasing silver supply is bleak. Meanwhile, investor behavior is adding fuel to the fire. Schectman observes that high-net-worth individuals and institutional investors who have traditionally focused on gold are now turning their attention to silver. These investors are aware of the supply constraints and are moving quickly to secure their holdings before the market tightens even further. This influx of investment is driving up demand at a time when supply is already under pressure. But it's not just the wealthy who are making moves. As Schectman points out, more retail investors are waking up to the potential of silver as a hedge against inflation and economic uncertainty. This broader interest in silver is putting additional pressure on an already strained supply chain, creating a situation where prices could rise rapidly as available silver becomes increasingly scarce. Schectman's insights into the dynamics of supply and demand offer a clear picture. We're approaching a critical juncture in the silver market. As inventories dwindle and more investors rush to buy silver, the market could experience sharp price increases. For those who haven't yet secured their positions, the window of opportunity is closing fast.
And that is a report. I don't know how many times when I see a report about gold in the Western media, it's always really bad. It's always, they frame it in a very bad way. And they'll always, even if it's a bullish topic, they will frame it in a bad light, right? And they won't speak to it in a flattering way. And they'll say, yeah, but. So let me see if I can find this here real quick. So the title of the article in Forbes magazine is, "It's hard to believe, but the world is beginning to lurch toward a gold-based monetary system." This is one of the first really gold positive articles I've read in a Western article ever. It's a very short one, so I'll read it real quick. The author says, it's hard to believe, but we're lurching towards a gold-based monetary system. This despite the fact that the historical gold standard is held in almost universal contempt by economists and financial officials. Contrary to numerous myths based on ignorance, the system worked. The U.S. was on a gold-based system for 180 years until the early 1970s. We never had inflation when the dollar's value was tied to the yellow metal, and the U.S. experienced the greatest long-term economic growth in human history. The signs of change are here. One is that the central banks in recent years have been purchasing gold at record levels. Buyers include China, India, and Russia, and a number of other nations, such as Poland. Adam Lipinski. These countries are reacting to growing doubts about the long-term value of the dollar, which in turn is a symptom of the perceived decline of the United States. And I want you to think of Judy Shelton right here, who would be, I think, the head of the Federal Reserve if Trump wins. She's a gold bug. She advocates for the gold standard and issuing 30-year treasuries backed or redeemable in gold. It says India last year began experimenting with gold-based government bonds. Monetary expert Nathan Lewis, who co-authored our book, Inflation, What It Is, Why It Is Bad, and How to Fix It, observes, these would probably be very popular with investors worldwide. From the start of the floating currency era in 1971 to the present, a gold bond paying 4% would have outperformed every stock and bond market worldwide. Zimbabwe, which must hold the record for hyperinflation, recently announced the launch of a new fixed currency in gold. Deep skepticism is warranted that this government has the discipline to make such an arrangement work, but the move is a sign of things to come. So I don't know that I've ever heard an article that framed gold quite this way in a Western publication. But in essence, what they're advocating here for is a gold standard, gold bonds, and tying a system to a tether that installs confidence in a country and in a financial system that's lost confidence. So I thought it'd be kind of interesting, and I really caught my eye.
As we've explored the various forces driving silver demand, from central bank accumulation and industrial needs to global economic instability and tightening supply, one thing becomes crystal clear. We are on the cusp of a significant shift in the silver market. All these factors are converging in a way that could make silver one of the most valuable assets to hold in the coming months. Andy Schectman has been a consistent voice warning about the looming silver shortage and its implications. He emphasizes that we are nearing a critical point where the gap between silver supply and demand will become impossible to ignore. The diminishing inventories, coupled with the unrelenting demand from both industrial sectors and investors, suggest that silver prices are not just set to rise, they're poised for a potentially explosive surge. Schectman often draws attention to the fact that once the broader market realizes the extent of this supply crunch, the price of silver could move rapidly. Those who have positioned themselves early, understanding the signs and acting before the rush, stand to benefit the most. This is not just about profiting from an investment. It's about securing financial stability in a world where traditional systems are increasingly unstable. Moreover, the historical precedent is clear. In times of economic uncertainty and currency devaluation, precious metals like silver have consistently been the go-to assets for preserving wealth. Schectman's insights remind us that we are witnessing the early stages of what could be a massive revaluation of silver, driven by forces that are beyond any single investor's control. In conclusion, the evidence is overwhelming. The central banks are stockpiling, industrial demand is soaring, the financial system is fragile, and silver supplies are dwindling. All these factors are aligning to create a scenario where silver could become incredibly scarce and valuable in the very near future. For those who are paying attention, this is the moment to act. Investing in silver now could be the smartest move you make before prices skyrocket and availability dwindles. As Andy Schectman advises, don't wait until it's too late. The window to secure your silver at current prices is closing rapidly. Whether you're looking to protect your wealth, hedge against inflation, or simply capitalize on a rare market opportunity, silver offers a unique chance to do all three. Remember, this is not just about making a quick profit. It's about positioning yourself wisely in uncertain times. So take Schectman's advice to heart and consider making your move now before the silver market changes forever. As always, if you found this analysis valuable, don't forget to subscribe to our channel for more insights. Stay informed, stay prepared, and most importantly, stay ahead of the curve. And remember, this is not financial or investment advice. Always do your own research before making any financial decisions.
Yeah, that's the point. And it's the wealthy who do well in an inflationary environment because their assets go up in value. And so you see even the hint of deflation and the assets start to crumble. And so that's why they always choose inflation, because the wealthy get wealthier. Not that they're losing purchasing power, but their assets go higher. But it's true. And then you talk about, being lied to real quick. You have right before Silicon Valley Bank failed, you had, the Fed, Powell in front of Congress saying, that Powell said, nothing about the data suggests we've tightened too much, right? And then 2 days later, Silicon Valley Bank fails. And you go back and you go all the way back to Bernanke saying the subprime crisis is contained, and boom, it blows up. And the way they said there is no inflation, okay, it's transitory, okay, fine, it's structural, okay, it's going away, but the numbers are all a bunch of lies. And when you talk about Silicon Valley Bank, the FDIC reported $600 billion in unrealized losses in the whole banking system, and the Fed always claims to be looking at all of the data, and they're supposed to be the key supervisors of the banking system. They would have had Silicon Valley's books. They would have had it all, and they didn't. And they jack up rates, and the whole system collapses. And here again, after you see one day drop, you have Jeremy Siegel, trotted out almost in tears, begging for a 150-point basis rate cut. Here again, to go, not only would that be the worst thing to do, because it would only exacerbate the unwinding of the carry trade, because it's, if the yen goes higher, or the interest rate goes higher, or the interest rate received from U.S. Treasuries goes lower, well, the yen carry trade unwinds further. And I mean, they're not thinking this out, but here again, giving in to austerity, giving in to lowering rates in a weak dollar, and those aren't good things. And it's what they have always chosen, and this is what Trump wants to do too, and which kind of bothers me. He's advocating for a weaker dollar and for lower interest rates, and Vance is talking about, well, maybe the dollar shouldn't be the world reserve currency. Where did we hear that before? Oh yeah, knucklehead Jared Bernstein. So I don't know that anyone's going to be able to pull us out of this, but what I do think is that we are destined for much higher inflation as a result of a lower dollar, a lower interest rates. But what does that do to the debt? Who wants to buy our debt? And maybe this is why you see Judy Shelton come up and say, yeah, well, that's why you should issue 30-year treasuries in gold, which leads me to one last thing before I let you go.